Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday. It is November 16th, 2012. We'll be looking at all major 19 markets that we track for you at PerfectStockAlert.com, as we do every Friday, showing you the different opportunities that I see in the market. As always, these charts are kept on the free website there, updated every single night, showing my stop loss limits, different opportunities that I see. You can see in this particular chart here, I'm talking about Australia's market, AORD. I've advanced the stop loss limit to this point here, and just continue to trail that down until you are eventually stopped out. You will eventually get a bounce, but right now I don't want to try to play a bounce here. I'll show you other charts today where I would be willing to trade a bounce, but this one here I wouldn't, because you're obviously in a downtrend, so the odds of trying to trade a bounce are not really in your favor. It makes it a harder trade whenever the trend is moving opposite of your actual trade. And in this particular case, we don't have much upside before you come to that 50-period moving average, where you will find the best short opportunities in a downtrend. So again, I don't really see this as something I want to attempt to buy here or anything like that. Even if you got a little hammer candlestick formation the next day or something like that, I would just leave it alone. Continue to advance the stop and let it eventually stop me out. The Dow Jones Industrial Average, we've been stopped out of this one finally, and we've locked in a very nice gain for this week. Now you'll notice we have this candlestick formation has set up in the formation of a hammer candlestick formation. It's something that I like to see. It shows strength there. But it's also important to note that you can scroll on down here and you will find that the volume behind the activity is more important to me in this scenario here. You are above average volume, and on this candlestick formation, that makes it that much more trustworthy to me. However, it should be noted, and I'm going to, like I said, I've already marked this chart showing that you can trade this to the upside. I'll talk about how you can do it in a minute, but the main thing you need to think about is, in this scenario, you are counter trend trading. You're basically looking at the trend saying, okay, the trend is down, so this is the overall direction. Now, if you try to buy this market here, all you're looking for is a little bounce. You're not expecting some massive rally to take out new highs. Don't get all married to the trade. If you're trying to buy this on confirmation on Monday, if you were to get confirmation on Monday, you could buy it with a stop set off of today's low and then continue to look for a test of the previous high. That would make sense to me. So a little bit of money to be made there, and you may even break through that high and test the previous, which would put you at about the 50-period moving average, which is where I would immediately turn around and start selling again. Remember, this is a downtrend. I want to look for short opportunities, so that means I look for a bounce, look for some kind of a peak sign, some kind of resistance, something, and then I get short again. So if you're going to trade this one on the long side, just keep that in mind. You're counter trend trading. Don't bet the farm on it, and look for small profit. The French CAC 40 index, this one, of course, I would not attempt to try to buy any kind of a bounce theory or anything of that nature. You're just not looking good here. You don't have a hammer candlestick formation. You're not that far away from the 50-period moving average, so the idea that you're going to turn around and bounce next week, if the U.S. markets do, I don't find that highly likely, because I would just get short really soon, and everybody else would too. A lot of people have missed this move to the downside. So all we've done is simply advance the stop. We started off way over here when we were shorting. We let this bounce happen. We got short more because you were at or above the 50-period moving average, and now she's broken down. That's great. We're taking out low points here. This is what we expect. What we're looking for. So continue to advance the stop on this one. You will eventually be stopped out, but don't be trying to go long here. The MIB Milan Index, this one basically the same overall story. We took a short opportunity when we were trading above or at the 50-period moving average. We've continued to move down here and breaking the low points again and again and again. We like this. Continue to trade with this to the downside. Do not look for buying any scenario here when you have a candlestick formation that looks like this. No hammer candlestick. Hammer candlesticks typically form before you get a bounce, and then when you have a different type of formation, like perhaps you may have, there are different types you can get, but the main thing you want to look for if you're going to be trying to trade that counter trend bounce, you've got to have a hammer off of it. If you don't have that, you don't really want to even attempt it. The German DAX composite, same overall story, downward slide breaking the support that we've been talking about before, and we like this trade on the downside. And it's actually just getting started. We've been actually trading faster to the downside in the U.S. than we have been over there in Europe, and so this is an area that a lot of people can still be short, holding that position and continue to watch it slide to the downside. Any bounce to the upside that's substantial would, of course, be an opportunity to get short if you've already missed it, because the trend is clearly down. Gold I discussed last Friday, I believe it was. We talked about it in the last Friday market analysis video, and I'm still watching it. You can still be short here. You have everything that's right. You had bounced up here, failed at the 50-period moving average, got a shooting star signal. The following day gave you confirmation. That could have been a short opportunity here. Could have used it again here. All this makes sense, and you're just pulling back here. However, I also talked about there was potential, very low, but there is potential for this to be actually developing a bottom at this level right now. And if you've got the U.S. markets bouncing to the upside, if you've got, the government or the Fed comes out and says, I'm going to start expanding what quantitative easing or QE3 is actually going to be used for, different things that could happen that could start to motivate gold to the upside. So it's a possible scenario here. When I'm looking at this chart I talked about last Friday, you've got this basic overall chart formation going. This is an inverse head and shoulders pattern. If you close above this blue downtrend line right here, that's going to be a buy signal. It's the only way for me to explain that to you, and that's basically telling you that we're starting to reverse to the uptrend and look for a test at the previous high. That's a pretty good move to the upside, and therefore if we were to, for example, trade sideways for a couple of days and then close up here above that line, I'd be a buyer there looking for a test of this move here. This would be my risk. It makes sense to me. The Hong Kong Hang Seng Index, this is one we haven't really messed with. Right now we've got conflicting signals. This low point here, lower low here is trending down. Same time period we got this high point and this higher high is trending up. So it basically says sideways. So what I'm looking for here is a bounce. I want to see a bounce maybe up to this level here and then start to roll over. Then I'll get short, as we will then have a series of lower highs from this low point, that high point to this then high point, and then we'd be trending down. It would make more sense to get short at that point. Again, you are also trading above the 50-period moving average, where you would find the best short opportunities in a downtrending market. This one hasn't actually completely turned yet. It's just starting to. You were in this little uptrend for a while, then you started to actually continue the uptrend here, and then you broke that. You are threatening here to turn from an uptrend to a downtrend, but right now you haven't quite done it. The BSE, or the India Bombay Stock Exchange, this is another one that I've simply missed and let it slide past me. I could see somebody taking a position here on the short side because you're not very far away from the 50-period moving average. I've contemplated doing that, but I'm just probably not going to do it. I'll think about it, but if I don't update the chart by before Monday's open, then I won't do it. But there is a potential here for another bounce, and if I get that other bounce, then I would definitely take the short position. So if I don't take it now and we don't get that bounce, then I will miss this move to the downside here, and it could be a substantial move to the downside. So you trade that at your own whim. But for me, the main thing that kept me out of it was that we didn't really have any good clear signal. We got kind of a uptrend going on for a while, and then that kind of petered out and we just kind of moved sideways. Then we got a little dip to downside, then a higher high, conflicting signals at that point, and now we've taken out that previous low again. If we get another bounce, I will short it. EWJ, or the Japan iShares, this bounce here is definitely something I want to short. It's basically bouncing right now on hopes of their Fed intervening there. But again, anytime you're in a downtrend, which you are, high point here, a lower high here, a low point here, a lower low here, lower low from all these, so you can clearly see it's a downtrend. Anytime you're in that scenario, you want to be looking for your best short opportunities at or above the 50-period moving average. We're very close to that, and today's actual candlestick formation is not bullish. It's actually hanging man in this scenario, because it's not at the bottom. A hammer at the bottom of a pullback tells you one thing. You pull back, you form a hammer. It tells you potential bounce could be substantial, like you had over here, and you want to trade that. When you don't have that, it just basically tells you this bounce right here is not the end of the sell-off. You will eventually peak out, roll over, and take out this previous low. Ergo, I want to be looking for a short opportunity, so let it either start to roll over and I'll get short, or let it run up a little bit higher, give me a shooting star signal, something I can keep a tight stop on, like we had over here. Something like that I could use. Right now, I can't use this. The London Financial Times Index, great short opportunity here. We've been short on this one for a while, holding that position, continue to advance the stop here. You'll notice there's no hammer candlestick formation here, therefore I wouldn't even consider looking for a bounce trade here or anything like that. If we were to continue to fall for a day or two and then start to form a good strong signal, maybe with some nice volume behind it, and the U.S. markets were forming to the upside, if all those things were in play, then maybe I would attempt it here. Probably not, though. I'm not all that impressed with the chart. The longer term chart's not all that impressive. We are trading below the 200-period moving average, ergo that's why I would understand a bounce trade here back to the 200-period moving average, but at that point I'd just be looking to go short again. Quick glance here at the NASDAQ. You can see in this one, same basic overall story, indicating a potential reversal bounce signal here. Nice hammer, nice volume, above average volume here. I like this. I like this as an opportunity to go long on Monday. And the only way that makes any sense is if the following day, Monday, were to make a higher high than today by even 1 penny intraday. If you were to get just a little move to the upside, you could be a buyer there with a stop set here. On this trade here, I would like that more because I recognize that we've still got this unfilled gap up here, this previous close here and this previous open here. That's an unfilled gap typically that's going to fill relatively in short order. So I would be looking for this to be a nice size move up to just above the 200 period moving average. By that time, you could be seeing the 50 period moving average a little bit lower there, and that would be where you start looking for resistance anyway. So that's a nice size trade there to the long side that would make sense, and then you can get short again because you are still in an overall downtrend. The XOI oil index, this one is another scenario where you could be attempting to go long. I'm not, because the actual move to the downside is not that substantial comparative to some of the other charts that I have to trade with. The more volatility, the easier that trade is going to be. This has not got that much volatility, so I haven't marked it. However, with what's going on over there with Israel and so forth and so on, you could see some activity to put pressure on oil and start to drive prices higher. So that's something that you may be wanting to trade. I may mark this later if we get another day. Confirmation the following day, like on Monday or sometime, the market is okay, yeah, I would buy it then. But right now, I'm just going to let this one sit there. Okay, a few weeks ago, looking at the UUP, the U.S. Bullish Dollar Index Fund, we talked about back during this time period that we saw this coming into a breakout and rolling to the upside here and finding resistance at the 200 period moving average. And that's back what we're finding out right now. You're starting to see the little shooting star signal here. You've got the overbought condition on the ultimate oscillator. All of that makes perfect sense to me. We'll start to keep an eye on it, of course, but I'm looking for a pullback. That pullback, if we can get a nice size pullback at the same time period, we're getting a nice size bounce by the markets, that'd be cool. We get a pullback here, I'd then turn around and be a buyer at roughly the 50 period moving average if I can get that, and then of course a seller at the 50 period moving average on the US market. So that's how they're going to be running the opposite one. Remember, whenever people go out and they sell stock, they in effect they buy dollars. That puts a floor in the price of the dollar and drives it up. And then whenever you have people turning around and buying stock, they're in effect selling the dollar, and so that's why you would get that resistance point with the same point that you would start to find support on the US market prices. The Russell 2000 Small Cap Index, this one we have been stopped out of as well as of today, and I wouldn't actually try to buy this one like I would when I showed you on the other charts. The reason being, we don't have a really clearly defined hammer candlestick formation. That tells me that this chart is weaker than the other ones, therefore I don't want to be trading on this one, and so that I just let this one bounce. But whenever we get that bounce, I'd be looking to get short again. Remember, we are in a clearly defined downtrend. The strongest moves are going to be in favor of the trend. Look at this scenario here. When you try to take a long trade here, you get this little move here, a bigger move to the downside, little move here, bigger move to the downside, little move here, bigger move to the downside. The strength of the trade will be when in favor of the actual trend. So when you're trying to take a situation where you're counter trend trading, you can do that if you set your stops right and you take the risk, but don't expect a lot on the upside because you're still in an overall downtrend. Therefore, look for a little move to the upside, take some profits, and then look for a bigger move to the downside to at least test the previous low. So in this case here, I don't see this as a bottom. I think we'll end up taking this out. The SPX, or the S&P 500 Large Cap Index, if you watched yesterday's market analysis, we went over all the U.S. market charts on the longer term and showed you that we were expecting a bounce this week, or not this week, but next week. That would make sense to us to see that happen. And so right here, I'd be taking that opportunity on the long side here. Again, I want to look for confirmation the following day. Anytime I mark a chart with a black arrow, it simply means take this trade if you get confirmation the following day. And confirmation on this trade would simply be a higher high than today's high by even 1 cent. Then that would be a buy signal with the stop set off of this low here, and I look for the test of the previous breakdown point. So in this case here, it will be about there, about the middle Bollinger Band line. A little bit of a move to the upside before we can start looking for. Let me find some kind of sell signal, something like that. We'll keep you up to date with what's going on at that point in time. But right now, I can see someone trying to trade this on the long side. Silver, of course, is going to be basically trading with gold. So everything I've said about gold, I would apply here to silver as well. If you get a breakout on gold, talking about the inverse head and shoulders pattern, then expect to find the opportunity to duplicate it on silver. You could trade either chart to get the same result. The Toronto Stock Exchange, this one actually made it very difficult for me to trade and was not capable of trading to the downside, even though I saw it coming. It just wasn't able to take advantage of it because we had a series of higher highs than we had before. That stopped us out, and therefore this move here was taken without us. Therefore, whenever this guy does bounce, I'm going to be wanting to get short, so just get a little bit of revenge, if you will. So I'm watching this for a bounce opportunity. I'm not going to try to trade it on the long side. You've taken out every low point that you had on this chart, and then some, so I would just simply let it bounce and then get short. The VIX, or the volatility index, runs the inverse of the S&P 500, overall trend basically. And in this particular scenario, it would be confirming the bounce potential of the S&P 500. So you can see that we have been in this uptrend for a while, making these little moves here, pulling back to the 50-period moving average and finding support there, bouncing off of that level. That's what's going to happen. Is your best buy opportunities are at the 50-period moving average when you're in an uptrend or below it. Then you get this pullback again. We talked about this last week. We had this little gap formation close here, and we gapped down here, and we told you could be a buyer at the 50-period moving average or below it, looking for actually a gap fill at the 1850 level. That happened, and then you got a shooting star signal, which also gave you a lower series of highs. So we move up here, we fail to take out the previous high, and now we're starting to roll back over here. That would be confirming the bounce argument on the S&P 500. Right now, I want to keep an eye on this. We could actually pull back all the way back down here to the previous support if we can see a strong enough move by the S&P. So I would let that happen. However, I'd be looking to go long at that point as well, because I don't think the actual market has a actual sustainable rally behind it. I think it's just going to bounce. The EMW, the Wilshire 4500, this is one that we've been stopped out of as well, and I would not attempt to trade this on the long side. I know a lot of people will, and that's fine for you. I'm not going to do it, just me personally. This scenario right here, you can see that if you wanted to call it a hammer, you could. It could be argued the way, so I won't argue that you can't possibly buy this. But in fact, with today's activity giving you a higher high than yesterday's and a higher low, you've already got the signal to be a buyer here. So if that were your argument, then you would already be involved here. Your stop would be here, and you'd be looking for a test at the 200-period moving average to the previous high right here. So that would be a small gain for you if you could see that kind of a move here. At that point in time, I expect that we're going to start finding this previous support line that is broken down to be acting as resistance, and I'd be looking to get short again. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. If you would like to check out those charts, that I keep my personal charts on this website here in the chart notes section, you can click there, and they're updated every single night with my notations, as well as my stop loss limits, entry opportunities, so forth and so on. And God bless, take care, enjoy your weekend, be safe, and I will see you all in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.